Good morning and welcome to this brand new edition of the newspaper show right here on ET Now. I'm Shell D'Souza and I'll take you to the top stories that's there on the Economic Times as well as Times of India for you. First up, let me start with the top 10 headlines that's there on the Economic Times this morning. And first up, it is Chinese bids in infra may face stricter scrutiny. Moving on, Ramvilas Paswan says the rules are soon to block cheap imports. Staying with the Chinese company and the imports, Telecom PSUs out of bounds for Chinese gear companies. Moving on, China beefs up their presence at Galwan Valley. India plans anti-dumping duty on China chemicals. Startups China funds may dry up. Also, you have demand starts revving up for the auto industry. Moving on, you have Prime Minister Narendra Modi to unveil coal mine auction today. You have COVID-19 that's derailed plans for GDP base year rejig. And lastly, Prime Minister asks Chief Ministers to focus on Unlock 2.0. Those are the top 10 headlines that we have on the Economic Times for you. But let me move on to the top of 5 headlines from the corporate space. First up, you have Tata Motors output to be in tandem with the orders. That's the word coming in from the CEO of Tata Motors. Moving on, telecom companies reject TRAI's tariff calculator plan. Airtel buys 10% stake in education tech Lattu Media. Moving on to the hotel industries, hotels unveil new offers to woo customers. And lastly, you have IRB Infra to raise 6,600 crores from SBI and Union Bank. From the corporate space now to the market headlines. The first up, you have Sensex. It slipped on China tensions as well as virus woes. That's yesterday's the last street performance. Moving on, you have SEBI. They have eased the creeping acquisition norms. Another news coming. Details from Nippon Life. Reliance Industries dollar bonds top PSU papers on returns chart. Lastly, high yield state bonds find favor with HNIs. All right, and those are the top 10 headlines that's there for you and the top corporate and the market headlines on the Economic Times for you this morning. But let me move on. Let me talk about the top story that we are tracking this morning from the Economic Times. And this is the story that we are talking about. It is about Telecom PSUs to be out of bounds for Chinese gear companies. So this is the top story that we are tracking this morning for you. I'll read the news directly off the paper for you. It says that private companies may also be barred from using equipment of companies like Huawei as well as ZTE. The government will bar Chinese companies from providing any telecom equipment to state-run phone companies and may also prohibit the private companies, mobile operators from using gear supplied by the likes of Huawei as well as ZTE. This is as per the senior officials in the government. They've signaled this is actually signaling India's first major economic response to the border skirmishes. Such a move would be a blow to Indian operations of the two, keeping them out of the country's 5G plan, that is Huawei as well as ZTE, both Chinese companies. The Department of Telecom will also scrap and rework the 4G telecom equipment tender floated by BSNL, MTNL to keep the Chinese vendors out. A senior government officials also told Economic Times that the government has taken a decision to cancel the tender which was floated earlier this year. If you see now, Telecom PSUs to be out of bound for Chinese gear companies. This is on back of the border skirmishes that we are seeing. Let's move on to another story relating to the border skirmishes, and this is the one that I'm going to talk about. Rather, my colleague Vivek Iyer will talk about is that Chinese bids in infra may face stricter scrutiny. Vivek, good morning. Like we know that this is also related to the border skirmishes. So what are the details of the story that's there on the Economic Times?
Well, good morning. And again, this is something that was expected given the fact that what's actually happened along the border is definitely going to impact both, you're talking about diplomatic relations as well as business relationships. Now, what actually happened was that in the last 2 weeks, one Chinese company actually got a project, and this particular project was the Delhi Meerut Rapid Rail Transfer System tender, which a Chinese company already won. Now, a lot of people, pointed out that given the rhetoric that India has been speaking about, especially in terms of Bharat Abhiyan or Atmanirbhar Bharat, this particular thing came as a bit of a shock given the fact that they did not expect a Chinese company to outbid an Indian player. So now today, of course, you've seen quite a bit of strong words as well as action coming in, and it appears as if especially this particular bid may be revoked. Now, also what is going to happen is that especially in infra projects. Now, remember, infra projects are projects that can be monetized, in specific intervals. So, especially in these projects and also in projects where there could be any amount of strategic importance, you could see Chinese bids that could face stricter and as far as greater scrutiny. So, overall, it does appear as the relationships, while they are weakening, Indian infra players may gain from increased competition or increased over regulatory side on Chinese companies.
All right, Vivek, thank you for getting us that story that's there on the Economic Times. That is, Chinese bids in infra may face stricter scrutiny. But from infra and telecom space, let's see what's the impact that is going to have on the startup space. And to talk more on that, I've joined by my colleague Chandra. Chandra, good morning. What's the impact that it's going to this entire border skirmishes and us trying to curtail Chinese investment have on the startup space?
Investments from China were already under scrutiny because, remember, the government recently amended the FDI rules, which mandated that any foreign direct investment coming from China would first have to get approval from the government. Now, with the additional dimension of geopolitical tensions because of what's happening in Galwan, it's going to become increasingly difficult for startups and unicorns to raise follow-on funding from China. Now, this is important because if you look at the Indian startup space, 15 out of 30 unicorns in India have Chinese investors, be it your Baidu, Paytm, Ola, Oyo, Swiggy. Apart from that, they have also funded half a dozen unicorns, which is a term used to refer to potential unicorns. That would include the likes of your Practo, ShareChat. And in the last few years, they have pumped in more than $7 billion. So they basically made up for the void that SoftBank and Tiger Global left. Now, with these restrictions coming in, we have to see how startups are able to cope with this, or if this will mean that American investors will double down. If you look at Geo Platforms' record raise of 1,50,000 crore, it came entirely from non-Chinese investors. But certainly in the short term, it is going to be difficult, especially for those startups and unicorns that have significant Chinese investors and who would have hoped for follow-on funding in the current environment.
All right, thank you, Chandra, for taking us through the details of that crucial story. Wait and watch to see what happens on that particular front. But let's shift focus now to the ET market space. There are a couple of stories related to the regulators. One is you have the market regulator as well as you have RBI, and we're going to talk about the RBI one. And that is, RBI has proposed tougher rules for housing finance companies. So what does this mean for the HFCs? I'm joined by my colleague Varun to take us through the details of the RBI's norms. I beg your pardon, Varun, good morning. What are these RBI's new proposed rules for HFCs?
It seems the RBI has tweaked its classification of what an HFC is. So now there's been a clear distinction between loans that are provided for purchase, construction, reconstruction and renovation versus loans that are for furnishing and loans against property. So the latter, that's loans for furnishing and loans against property, will not be classified as housing finance loans. They will be non-housing loans. A housing finance loan will only be classified where there's a purchase, construction, reconstruction, renovation or repair of a residential unit. The second thing is that from an overall loan book, 50% of the assets need to be what I just mentioned above. They need to be classified as proper housing loans for you to maintain your HFC status. From this, 75% should be individual loans. So if you don't have this, you may need to re-explore your classification, and some HFCs might be converted to NBFCs or treated as NBFCs. Now finally, which ones will get money? So they've been classified as systemically important and systemically unimportant. So if you have an asset size of over 500 crores, you classify as systemically important. If you have less than 500 crores, you're not systemically important. The minimum NOF requirement has also been raised to 20 crores from the current 10 crores. Group entity exposure. This is a very important point. You are not allowed to do double financing. So no longer can you lend to both the construction companies and the individuals who are buying flats in the same project. There has to be a clear distinction there. And realty exposure per group has been capped at 25% and 15% for any single entity. So these are broadly the lines to look out for. The limits for commercial real estate and CME have also been raised and capped rather, and the minimum capital requirement has also been increased.
All right, thank you, Varun, for taking us through that story. Now let's move on and let's get on board my colleague Jayesh Kilani. Jayesh, good morning. There's a story on the Economic Times market page that says the SEBI seeks Z trade details from Nippon Life. So what is this exactly? What is the SEBI asking for in this particular case?
Good morning, Cheryl. Rightly put that, SEBI is in fact probing whether a few employees of the Nippon Mutual Fund had traded in the stock of Z Entertainment on the basis of some insider information when it had actually crashed about 34% on 25th of Jan 2019. What the regulator has done is they have sought the employee details from the fund house along with their bank account details as well, just to check, if there was any foul play involved in that. Of course, the mutual fund has also responded to the Economic Times saying that this is normal course of action and nothing out of the ordinary because the regulator keeps asking for such information, and the mutual fund has in fact complied with the same. Just to give you a background of what had happened last year, there was a 3-day ordeal that was there on 24th of Jan. A media report had alleged links between the Z promoter and the Nityang Infra Power, a company that is under investigation for demonetization related transactions. On 25th day, which is the following day, the Z shares in fact plummeted more than 30%, eroding the value of Z Entertainment by more than 10,000 crores. Because of this drastic fall, many Reliance or then Reliance Mutual Fund carried out transaction on the pledged shares and sold them in the open market. On 26th of Jan, SL in fact clarified that the fall in Z Entertainment was not related to its performance, but there were some negative forces acting against the company. So this is the overall matter that is there. We'll have to wait and watch what exactly the SEBI probe turns out to be.
All right, thank you, Jayesh, for getting us details on that particular story. But let me now shift focus to an exclusive that the Economic Times has done, and it is on page 6. And this is the man that they've done an exclusive interview, and that is Tata Motors CEO. So in an exclusive interview, the Tata Motors CEO is saying that Tata Motors' mission is to save cash and link production to the demand. On the move firm looking at tighter production demand coupling and finding ways to drive market share through affordable pricing models. That is the word coming in from Tata Motors CEO. He's also saying we are taking stringent steps to conserve cash, like I said, and are also shifting from block to build to make to order kind of transmission that they are having in the way how they want to take ahead with their production. Tata Motors is conserving cash and tightly coupling its production plans to demand to help prevent an inventory build-up, and is banking on the eventual carve-out of its passenger car division into a unit to make the business more competitive. That is what the CEO of Tata Motors told Economic Times in an exclusive interview from Austria. He's also saying the transformation, which started a few years back, is enabling the organization to be better prepared to deal with the crisis, the subsidization of our passenger car business will enable it to have greater independence and access to new age tech, capital and alliances to be agile. That is the word coming in from Tata Motors CEO. An exclusive interview that is done by the Economic Times. ET page 6 is where you will find that particular interview. But let's move on and let's talk about India's plans on anti-dumping duty, imposing anti-dumping duties on Chinese, some of the Chinese goods. And my colleague Pankaj is here to talk more on that. Pankaj, what is this particular story which we can find on page 5 of Economic Times?
So about Chinese chemicals is something, where there is a lot of import really happens of various different products. Of course, chemical is such an industry where you have a lot of products coming in. So what essentially, we can pick up is that India may actually impose anti-dumping duty on aniline imported from China. Now, this is with a view to safeguard the domestic industry from cheaper supplies of chemicals, at least from the neighboring countries from now. DGTR, which is Director General of Trade Remedies under the Commerce Ministry, has recommended an imposition of provisional anti-dumping duty on the products coming in from China. It also says it will continue to treat China as a non-market economy, allowing India to impose anti-dumping duties to cheap imports to protect the domestic industry.
Taking us through that story, but let's shift focus now to SEBI, and SEBI has eased creeping acquisition norms. They're saying the promoters can hike stake by up to 10%. Stake hike not to trigger an open offer. Also, regulator also cuts time between QIPs to 2 weeks. The SEBI has allowed promoters to acquire 10% instead of currently permissible 5% through creeping acquisitions without triggering an open offer, giving a one-time relaxation to help locally listed companies access funds in a difficult environment. And this is this is an announcement that the SEBI made yesterday. They've eased creeping acquisition norms. Moving on, let's talk about the Prime Minister and Chief Minister's meeting, which was held yesterday, and day 2 of the CM's meeting with the Prime Minister. They discussed the unlocking strategy, ramping up health infra and more. Prime Minister also, in his opening remarks, said that with the increase in the cases, the testing and tracing have also been made very efficient. Diagnostic kits are also made available in abundance, and telemedicine has increasingly played a major role. And that is the update that is coming in from the Prime Minister's meeting with the State Chief Minister. Yesterday he met 15 Chief Ministers. And now let's shift focus to the top story is actually tracking, and as well as is there on the Economic Times right here on the front page. It is about what's happening across the a befitting reply. Military options against China has been discussed. He's also called for an all-party meeting on Friday. You also had Prime Minister, like I said, he said that the sacrifice of our 20 soldiers will not go in vain. He also went on to add that while India wants peace, it will give a befitting reply if provoked. He also said that India's integrity and sovereignty is supreme for us, and no one can stop us from defending it. I beg your pardon, from defending it. This is what the Prime Minister had to say yesterday, and this is one of the stories that we will be tracking very, very closely. That is India and China border skirmish. Let's move on now. Let's talk about the top 5 headlines that's there on the Times of India this morning. And first up, like I said, Prime Minister Narendra Modi has warned that India will give a befitting reply. Moving on, Prime Minister Narendra Modi also said that boost health infra and gear up for Unlock 2.0. This is what he said at the State Chief Minister's meeting. Moving on, in a first, India sees over 13,000 cases in a day. Death rate jumps from 2.8% to 3.4%. And lastly, Maharashtra government caps walk-in lab tests at 2,500. Right, with that, it's a wrap in this edition of the newspaper show. But before we wind down, here's a special segment for the hearing impaired. Please do tune in.